you guys? Boris here with another episode of Finance Talk. Thanks for tuning in, you guys. I appreciate all the support. We're talking about finances, macroeconomics, you guys. I like to talk about macroeconomic events and how is it that we could position ourselves to profit off of what's really taking place in the world, you guys. So it doesn't really matter if there's a Democrat or Republican in the executive branch. It doesn't matter whether bond yields are spiking. It doesn't matter whether there's inflationary fears. It doesn't matter, none of it. A mortgage rate spiking? Is there going to be a flood of foreclosures? You guys, just position yourselves how to make a profit. Whatever's going on in the world, it doesn't matter. Just be smart about it. Keep an open mind. How is it that I could position myself to make money? You could always make a money. As Jim Cramer always says, there's always a bull market somewhere. It's my job to find it for you guys. So I don't mean to sound cheesy, you guys, but it's true. There's opportunities to make money in any kind of environment, you guys. So we're talking about today we're talking about industrial plays. Joe Biden is coming up with the industrial package. A lot of people are saying there's going to be a lot of industrial stimulus going on in the world. Railroads, construction, road projects, any kind of federal kind of program having to do with construction, you guys. That's going to do well in the next couple of weeks, in the next couple of months, perhaps. So we're going to be talking about a stock that I'm watching on my watch list carefully. I've already done a little bit of day trading in it, and I've seen some powerful moves. It doesn't have a confirmed breakout, you guys, but I want you guys to watch this play very closely. Let's look at the health of the overall markets before we jump into my trade idea on rail. Starting with the SPX, this is the S&P 500, an ETF that tracks the broader indexes. The S&P is just off its all-time highs. If you look at the far right of the screen, we're just a few ticks below off our all-time high, so it's very bullish. I wouldn't be surprised if we're retesting our highs coming soon and we're cracking 4,000 on the S&P. Next, let's look at the Dow Jones Industrial. Let's look at the DJX. So once again, here's our lows in March 2020, the inception of COVID, and we've been basically vertical ever since. Very bullish. If you look at the far right of the screen, we're just a few ticks off our all-time highs once again. In fact, the Dow is even more bullish than the S&P. This is the strongest one. So I'm very bullish on industrials. The Dow Jones Industrial Average is very heavy on industrials, right? Lastly, let's look at the Qs. The Qs tracks the NASDAQ. So the NASDAQ is very heavy in tech. And I'm very bearish on tech right now. So if you look at the channel on the far right, we're far more bullish. We're nowhere near our all-time highs. In fact, we're trading sideways here. So based on these three indexes, you guys can tell that the markets are fairly strong. However, you must be careful what sectors you're trading within. Tech is very bearish right now. However, industrials are very bullish, you guys. Here's my play on rail, R-A-I-L. I am bullish on this. This is FreightCar American. If you take a look at this technical chart, now listen, I'm a technical trader. Some people are fundamental traders, some people are technicals. Now if you have a company that's fundamentally strong and a technical breakout, now that's very powerful. This is just only a technical evaluation, you guys, so just bear in mind only technicals. So take a look at this chart, you guys. It's a long rounded bottom, and there's multiple resistance levels. We got the first resistance at 567, right around here, 567 level. Then we got another resistance level around $8, the $7.80, $8 range. I'll have to take a closer look at the exact resistance levels, but this is just a visual. Around 867 is the next resistance level. Then we have a gap down. The bottom of the gap is 1246, and then the gap fill is around $14. So these are my different target levels. Target 1, 2, 3, 4, and finally target number 5 is the gap fill, you guys. So if you take a look at on a daily, let's take a look at Friday's volume on a daily chart. Put on a 5-minute chart here. Take a look at these volume, you guys. You see some big uptick in volume on Thursday, and then a really big uptick in volume on Friday. Let me zoom in on Friday's chart here. So here's our 567 resistance level. See a nice uptick in volume right around here. We tested the 567, and this is a rejection. I know you guys are saying, look, we traded just above that range. It doesn't matter if you trade just above it. You need a clear breakout. These resistance levels are not an exact science. Sometimes you trade a couple ticks below it, a couple ticks above it. Just know that the resistance level is still holding. You need a clear breakout. Obviously, this is a rejection. This is not a breakout. So if you went long right here, you lost money, right? Because if you went long on a day trade, you lost money right here. But fortunately, we retested, and take a look at the volume. You need to see an uptick in volume to see a confirmed breakout. So you see an uptick in volume right here. We tested it. and then we rejected it. And then volume comes back down, and we have low in volume right here, and then volume starts to build again. Now this is a breakout right here. This is a confirmed breakout. Look at this big body volume candles, multiple candles, multiple. These are 5-minute candles, by the way, you guys. So you could see this big volume lasted for some time. I went long on a day trade around at the 567, and then I bought it right on here in this candle right here when we retested resistance right here. Now when we break resistance, it becomes a support. So here we broke above it, and this red candle, it was a test right here. We tested this resistance, became support. We tested support on this 5-minute candle here at 11:15. We traded above it. We did not break below, and right around this level here between 515 520, I bought calls, you guys. I bought calls at around this level here, and I sold at $6, and I made a couple $100, and it only lasted a few minutes, you guys, like 15-20 minutes I was in for the trade. As you can tell, between these are 5-minute candles, like 3-4 candles here. I was in it for a very short time, you guys, and I closed at $6. My day trades are very quick. I make a few bucks and I sell and I close out. What I should have done is sold half of it at $6 and sold the remaining half up in this area right here, lock in my profit, and then sell the balance up here. That's what I should have done. I was a little premature in selling everything at $6. I could have traded this better, but nevertheless, a profitable trade is a profitable trade, you guys. So that's what I did on a daily. If you guys take a look, around 11:50, this breakout was a failure. We came back down. We came down to support. Remember, resistance became support. We came back to our support level. We tested our support. It acted as support like it should, and then it traded back up again. And then the second test of support was a rejection, was a breakdown. And we traded below this level, you guys. And then our support once again became resistance. So we traded down here. And we retested our resistance, failure, and then we're trading just below the support level. This is aftermarket trade, so it's low volume. I don't really give this too much credence. It doesn't mean too much. But if you take a look here, we tested resistance, failure. We retested resistance again, failure. So that's Friday's action, you guys. I did this as a day trade. I have not gone long on this yet. Let's go back on a daily, right? So I'm looking for, on next week's action, Monday, I'm looking for a breakout above the 567 level. If we break above the 567, 570 level, you guys, I am then going to wait for confirmation. I'm probably not going to put on a long trade on Monday. I may go long on Tuesday. If we open on Tuesday above Monday's close, or better yet, if we open above Monday's high and we stay above those levels, that's definitely confirmation of a bullish breakout, and then I'm going to go long at 567, and 567 will become my stop loss. And I have my multiple targets. These are my target 1, 2, 3. These are my targets. This is my entry, target 1, target 2, target 3, target 4, you guys. Every target I'm going to sell a little bit. So I might sell 25, 30, 50% here. I sell maybe another 25% here. And then at this point, I may sell all of it. I'm going to be watching when we retest this level at $12, $12.40, $12.50. When we start testing those levels, I'm going to be looking for an increase in volume for a breakout. If I see volume decreasing at this level, it's going to fail and act as resistance, you guys. And then at that point, I'll probably close out my entire position and take my profits. All right, you guys, that's my trade idea on rail. I'm bullish above 567. Once we break the 567 level, like I said, resistance becomes support. 567 becomes my stop loss. Once we start trading higher, I'm going to move it up. I'm going to start trailing my stop upwards of 567. We have multiple targets. We have a gap fill on $14. I'm bullish up to $14, and then that's some serious resistance level at $14, you guys. So I don't know how I'm going to play this. I'm definitely going to play this. I'm definitely bullish on this. I'm definitely going to go long on this, but I haven't decided whether I'm just going to buy long stock, whether I'm going to buy calls, or whether I'm going to sell puts. I haven't decided, but I'm definitely long this. I like to sell premium, but if I'm very, very bullish, I might just buy stock, or I might just buy calls if I'm very bullish. And in this case, I'm very bullish on this, you guys. Industrials is a very strong sector right now. So that's my trade, you guys. Thanks for tuning in. I'll see you on the next one. Peace out, you guys.